and welcome to the weekly wrap video. Just a couple of points to catch you up on over the past 5 days of trade. In a week where the first half was bereft of US data, all the focus was on global central bank policy, particularly with the BOJ rate decision early in the week where some had speculated that Kuroda, the governor of the BOJ, and his board could unveil measures to help quell the volatility we've observed in the domestic bond markets over in Japan. However, this was not the case, with Kuroda and the board actually concluding that there were no new measures needed at this point in time, but they will just continue to monitor markets. The markets across the globe did not particularly like these comments, with a lot of volatility being observed in the Nikkei 225 over in Japan, seeing another very disconcerting week, closing down as much as 6.5% on some trading sessions. As such, the yen has aggressively strengthened across the week, moving over 450 pips lower from the start on Monday to the close on Friday, printing a low below the 94 handle over the past 5 days. So let's see if this trend does continue into next week, with another blow being dealt by the BOJ minutes released early on Friday morning, where one member of the board did suggest the advantages of limiting the QQE program to just 2 years in order to preserve financial and fiscal balance. But elsewhere this week, a lot of focus has actually been on next week's Federal Reserve rate decision, as speculation begins to mount and increase that the Fed could move to taper their QE program. However, late on Thursday, we saw an article out of that key Fed watcher, John Hilsenrath, out of the Wall Street Journal, saying that the Federal Reserve officials are of the opinion that the markets are overreacting to this sentiment. As such, they're likely to try and give a signal that they're not looking to raise long-term interest rates anytime soon. As such, all attention does turn to that FOMC rate decision due next week with a Bernanke press conference. And then finally, from the ECB this week, we did have the ECB's crisis-fighting tool, the OMT, being challenged in the German Federal Constitutional Court. The only conclusion coming out of that was that there are continued differences in opinion among the central bankers, with Weidemann of the Bundesbank in Germany voicing his opinion that the OMT, if excessively used, could cause financial imbalance and give governments in the Eurozone too much time and not enough pressure to reform their balance sheets. However, not expecting any firm conclusions in regards to the ECB's OMT programme until well after September, where the German Constitutional Court issue their final ruling after the federal elections. But as mentioned, all focus on next week with the Federal Reserve's rate decision and anything that Bernanke does have to say in regards to that $85 billion a month bond buying programme. But in the meantime, I hope you have a fantastic weekend, and I hope you had a great 5 days of trade.